That is right, the US sonic boom, economic growth is beginning. Hey everyone, this is Coach JR, and today as usual, I want to come back with a little bit of the Hawkeye Scanner. There I think we have close to 152 buy signals. That means it is about to start. Also, I don't know if you're paying attention, IWM. That's right, the Russell 2000 seems finally, cross your finger, it's breaking out to the upside, and that just means money, everyone. That means a lot of money for all of us. And what better way to actually get to those opportunities when you have the right tools? And that's why today I'm going to talk to you about the Hawkeye Traders scanner, how I get all this data at the end of the day, and how the data is just a guidance. Remember, data is just a way for you to do less and get everything on your desk. So at the end of the day, you get a report from our team with all these ideas. And then, of course, you want to filter. You have some guidance. Let me share with you. There's, like I said, 152 long alerts, and they're divided trend entry long. You also have roadkill long. You have roadkill volume aggressive, and that gives you plenty to work with. So the one thing that caught my eye is this one, CAT. What is that ticker about? That's Caterpillar. And let's take a look at what's happening. First, I'm going to start with the idea that I wanted to share today with you and why I think there's a continuation. Stocks like Caterpillar, Deere, stocks like even Walmart, they are leading indicators of the economy, leading indicators of consumer price behavior. Now, Caterpillar is more an indication of the health, the overall health of anyone's economy. In this case, of course, the United States. What I want to do all the time is understand where is the stock. The stock is pulling back. It actually had a pullback from this high, 245. You have a 23% pullback. You just need to pay a little bit of attention. What kind of pullbacks do you expect on a stock like Caterpillar? Look at this, 41%. But that 41% is from December to the bottom of COVID-19. So that's unusual. That's a 41%. Other than that, if you look at the price behavior, this is when the economy was just, it actually reached a peak. In the US, you have a 35.62%. My idea is usually Caterpillar will not reverse that much. So I will be looking to be a buyer in this zone. Of course, if you look at Hawkeye Trends Plus Stops, what is happening? What is the tool telling me? The tool is telling me that we're still bearish. Nevertheless, now the price is breaking. It's trading above the last band on the Hawkeye Trends Plus Stops. So this is the beginning. I would be expecting for this to turn green in the next 2 to 4 days, about a week. Now, at the same time, if I look at volume, I have some evidence to think like they started building their position somewhere back on the first week of August. You have a big entry, then the mark came down to this level. This is the full block level from January of this year, 180, all the way to 200. So this is the area it's defending. It's about 10 points, $10. I want you to pay attention to this, because if you look at the perspective, what the stock is doing, it entered that block area where you find liquidity, lots of liquidity. You have volume, you have a little bit of volume. That's when you have the massive breakout. So what that means is, in reality, the price just reversed to the knot of liquidity, which is a full $10. Yes, 199 to, well, 81 to 199, almost $20. That's a lot of liquidity. So it picked all this liquidity, more volume. That's why you have volume, roadkill, and heat map all combined. And the first two levels are indications that they're in the stock. You have 1, you have 2, and you have 3. That's the volume coming in. That's why you move from 186 all the way back to 209. This is one way to look at it. Now, I want to start with the short-term view that gives you the opportunity to jump in. We have this volume. Now we have Hawkeye Trends Plus Stop is green. That is your opportunity to jump into stock and say, okay, I was bearish the stock, and now I start building up potential entries. The first signal to go in is when we turn heat map, volume, and then you have the Hawkeye Trend Plus Stops turning green. That's when you jump into the stock. So somewhere around 193. If you do that and you have the tools and you're looking to trade the stock, you're up about 8%. We do know that playing the options will have an opportunity to stretch this return and probably take 100, 200% on the weekly calls. My idea is look at what's happening now. Look now at the 4 hour. It turned green. We have a big bar. We have about 3.67% in 4 hours. That's a lot. That means their volume went into the stock and is building up. Now, heat map, roadkill, volume, all turned green. And finally, we have the daily. And on the daily, we have this nice pullback to the second level on trend plus stop. That's your opportunity to go in. Right there, that's your opportunity to go in. And now we have easily, we're at the level where we are expecting that particular breakout. That's what we have, and this is where we will see a continuation, potential continuation to 223. That's what I have on the table. Now, we're looking at the perspective from what is happening on the weekly, how slowly is building up. But this is everyone, you have to see that these are just signs that things are about to get even better in the US. There's a lot of fear in the media, as usual. CNBC, they do a good job. Jim Cramer talking lots of nonsense is really good at that. Don't listen to these guys. Pick the tools. Look for the technical view. Look for where those guys, they're not looking at. You're looking at technical levels. You're looking at volume. The stock price won't move. It will not move without volume. It doesn't matter what they say on CNBC. It doesn't matter what you read on the Wall Street Journal. And even with the Morning Brew crew, they're nice people. They're really doing work. They're trying to inform, but they're missing out the big picture. Now, is their job to do that? Oh, it depends. But if you're going to tell me something, don't tell me all the time the past. Don't tell me how someone is banking of this. At least try to, if you don't want to take that responsibility, because that's what it is, just, ditching the responsibility or ditching in reality a way to do a better job. Then, hey, you know what? Hey, just tell people where to find the tools. That's what it is. And what happens is when you get these tools, when you get the Hawkeye Scanner from our team, when you're watching these videos and looking at the big picture, then it's a much better data. It's a much better approach. It's more informed. The information you get is way better. Now, what I want to do is this. I want a continuation. Clearly, there's a continuation potential move to 222. And closing the gap, all the area liquidity level back to 246. Not the gap, just closing the liquidity not back on the high. This is the high of the year, 2021, June, the first week of June. So what we're going to do, as usual, the purpose of the videos is not to tease you. Yes, it's an idea to showcase the ability, the capacity of the software. But at the same time, it's for you to pick a copy, and it's for you to pick a copy, for you to get the license, a professional package. You know that there's a link in the description on the video. That's great. Now, my idea is also to share with you something you can look to make some money. It won't be perfect, but it will give you some sense where to look at options. I will start with the weekly, and then I think next week is the month. No, it's the 12th. Let's try it for the weekly, and then November, November 19. So let's take a look at this. Let's take a look this week what we have. So according to this, there's none. The stock is 205. It will take a move to make it to 10. Let's pick this one. Let's try this one that is 3,300 contracts in the open interest. Okay. Delta 22, that's not bad. I like that. I always tend to look for delta that is above 20. Open interest, as I indicated, 3,304 contracts. Look at the volume. The volume yesterday was 4,835. This is the beginning of an unusual activity. It's not huge by no means. It's 100%. You can still live with that. But this is the beginning. The difference between the volume and the open interest, also the expiration date. There's a lot to say about the unusual, but this is just a few steps for you to detect on your own unusual options activity. This is absolutely very attractive. I'm going to save this for future references. You have that. And that's the trade. So I'm long this week. I will take Caterpillar as the 210. And yesterday, 79 cents. Pay no more 90 cents for this one. The contract low is 18 cents, and absolutely there's something that may not be happening on this particular contract. Yesterday we had 4,835 contracts. All right. Now, what I want to do is give you one with more time. Let's take a look at one for December. What do you say? Okay, December. That will be, it still will be a speculation on the option. Everything about 60 days is way better. Let me take CAT. Let's take a look at CAT, and let's go to the option chain. And the monthly, yes, the monthly will be December 17. Perfect. I like to pick, you don't have to. There's a difference between in the money, trading out of the money, dip in the money, and very far out of the money. Let's see what we have. Let's open all the strikes. Remember, you can always use Quote Media to take a look at this information, or you can do it directly on your trading platforms. High volume. We have the 220. 220 selling for 234. This one is selling for $1. Doesn't have a lot of open interest. Pretty basic. You can see that. The 210, it has 400 contracts. That's going for $500 a buck, a piece of contract. 230. Yeah, I think I want to do 230. I want to pay at least $1, less than $1 if that's available. Yeah, the delta is 11. All right, so I think we want to play this one as well. Potentially that would be the monthly. You will have probably 45 days, close to 45 days to expiration. It will be the 230. That's the monthly expiration, December 17. That's going for $1. Pay no more than $1.10. The contract high, so you know, it's $10.90, and the contract low is 52 cents. That means we're paying 100% over the contract low. And if we actually start, as I can see this based on the entry as well, we have a roadkill entry. There's a continuation, any pullback to 195, even pullbacks to 192, will be absolutely buys looking at Caterpillar, CAT. So that's it, everyone. Two trades idea, short term, Friday. The 210, pay no more, 85, 90 cent stops for this. And then I'm looking at Caterpillar. 230 call, December 17. I'm long the stock. How do I get to this? I don't have to chase any stocks. I get everything from my Hawkeye scanners. 152 alerts today. The market is turning bullish. And I guarantee you there's evidence that the US sonic boom economic growth, it's beginning. You do not want to miss out. Thank you guys, and see you in the next video.